GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Plan is to go through some technical analysis of the major markets covered with clients, so that's Forex markets, that's also commodities and a bit of crypto and indices. Any other markets you'd like us to cover, please drop a comment in the video, or any other comments, please, more than welcome. And if you do get some benefit from these videos, please click that like button, it really helps. So without further ado, let's have a look at the euro dollar. And so there has been a bout of dollar strength recently. This is our 4-hour chart. We can see here that this had been our rising euro trend, and we've broken that trend. We've pulled below the 50-day moving average, we've broken the trend line, and we've taken out horizontal support at 117. So having dropped through 117, you can see we've had a small test of the area, not actually hit the level. And so potentially that could still be on the cards, and I think that would be an opportunity to the short side. Were we to get some sizable euro jump, then we could look to the previous highs here, which have already been tested twice, or the 117 level. And should we push further beyond that, then I'd be looking to that old area of support here, which if I budge it up a little bit, you can see it's these two lows here, and then you can see the false break there, and then the real break took place, and that is pretty much 117.50. So you can see it's always kind of around the round numbers here. So either a genuine test of the 117 level through these highs, test 117 and roll over, or we get a bit of a more sizable euro bounce up to 17.50. And I'm just saying that based on the idea that we've kind of broken through this uptrend and the bias is downwards a bit for now, those would be places we could look for short opportunities, potentially 117, 117.50. Above 117.50, again, you can still look to the short side, but it would start increasing the odds that actually we've just had a bit of a dip, broken these trend lines and the 50-day moving average, but that the longer term uptrend is still in place, and this was a dip that's been bought up before we head over to new highs above 120. Obviously, big context here is that we did hit 120, we hit this declining long-term trend line, and you can see we've got a big, so far at least, and we are close to the end of the month of September, a bearish engulfing candlestick pattern here. So a bearish pattern at the long-term trend line, it's a good setup, it's a good bearish setup. As I say, we haven't finished the month yet. If we've got a massive rally over the next 3 days before the month ends, then we can think about revising this idea. But for the moment, massive bearish engulfing to take us out the short-term pattern. I think we're at a 2-month low, and obviously that monthly bearish pattern as well. So all reasons to think that probably we're looking like a bit of a kind of bearish situation here, but possibly a bounce in the interim to give us an entry opportunity. Let's switch gears to the pound. This is down at the 4-hour chart. Similar situation, that we topped out at 135 and then swept lower, came back and retested the 130 round number, and it seems to be 127, which was it's pretty much, I'd lined up this old high, which was kind of the level we tested the first time, and then we came back to these old highs through here, pretty much on the nose, which is around 127. Which is where we're rebounding from now, and you can see on the short-term chart we've kind of based out there and we're pushing higher now. Still with the same idea that the trend does appear to be lower for now, but if you do see that there's some bullish divergence going on here where we went oversold after that steep drop, rallied up, didn't get into overbought territory, which is typical of a downtrend, but then we did come oversold, but not as much as last time. We pretty much bounced neatly off the 30 level on the 4-hour chart, and hence we're pushing higher now. We First area resistance would be that support and resistance there, but it has already been tested by this level, so it's not quite as strong in my book. That would suggest possibly we're going to make another run up towards 130. So that so we had a big drop, maybe more of a consolidation phase. We're getting a rally up here. We have made new lows, so technically still in a downtrend, but I'm just saying that downtrend seems to have lost a little bit of momentum. Maybe that can be explained just by this move up we're seeing today, but I suspect there's a little bit further to go, and if there is, that would be good, because it could offer us some kind of slightly better entry point than where we are now. Maybe something in through these, you can see these peaks, this low here, could be an area, or just the 130 level. We try and crack above it one more time, and potentially there is where we can sell down again. So summarizing, we've had a big pullback, and we haven't made much progress through the previous low, so I'm suggesting maybe we're moving into a bit more of a short-term consolidation phase at least, and it might just be a little bit early to be trying to sell this down again. Maybe we get a rally a little bit further up to either this first area of resistance up here or 130. Let's move on to Dolly Yen. Still a very tricky pair to be trading in my book, but you can see this is the general downward drift, and we had a nice rally off the 104 level last week. We did touch our lowest levels since March, but only very briefly, and then we put in a classic kind of pin bar, morning star reversal, and we've rallied up, but not the full extent of the decline. And I would say that probably I'm not really looking necessarily at horizontal areas of support and resistance, more just this downsloping trend line. If we bounce into that, that would be a short opportunity. If we close above it, as we've been discussing on these previous occasions, that would suggest a bit more of a bullish turn, and potentially even a double bottom having formed at 104. So as you can see at the moment, today we're turning lower. This was a sizable level of support that we managed to creep above, so hopefully what's happening here is we get a test and then a move up towards maybe a better area for selling the market down. But should we broke above it, but if we broke straight back below this horizontal support here, then maybe that's telling us that we're moving for another test of 104 and lower. Aussie, because it's been one of the strongest markets, now that it did roll over finally, we had that rising channel, if you remember, and that sort of internal trend line, if you like, and we broke pretty sizably below it on a daily basis. We fell for several days on a trot, but we banged straight into the 0.7 level, and so we are stalling out here, and potentially a little double bottom happening in here through these lows. So we're attempting a rebound of 107. If we get that rebound, it's not that we so clearly some people are buying in at the round number here, 107, for positioning for a move higher, so that is an option to do that. But if we're still of the mind that actually it looks like we've kind of changed trend here for a little bit, we were in this prolonged uptrend, now we're breaking lower from it. If we're looking for areas to sell down again after that bounce, well, if we took this as like the decline, and you can see this was the high here, and we had a couple of false breaks above it, and then finally from that same exact level, that's where we dropped down. Here's our broken trend line, and we tried to get back above it, failed, and move lower. If we are going to retrace some of this downwards drop, this would be the level I'd be choosing, and so there's the 50% there, where you can see we had a bit of a consolidation. And then right on top of the 0.72 level is the 61.8. So I think if we get a rebound up to 0.72, well, clearly that's 160 pips up from here. But I think buying up to it would be counter trend. But by the time we get up there, that could offer a decent risk-reward opportunity to the short side, assuming that this drop has more to go. So the call that you need to be making here, obviously, in these currency pairs is that we've had some dollar strength, we've had the other currencies move lower, Aussie, pound, euro. So is this just a dip to buy, to expect in the case of the Aussie, move up through 0.74 and up to 75? Should we be buying 70 to take profits at 75? Or is this actually the beginning of a more prolonged drop? I tend to, I'm just going off the basis that we are below the 50-day moving average, we're below trend lines. So just for me, of course this could be a dip, but I'm just going to treat it for the time being as a trend reversal, because that's the rules I follow. Judging on the 50-day moving average, whether we're making higher highs and higher lows, just that immediate trend to me has turned bearish. Obviously I'll reverse course if we start printing higher highs and higher lows, back above the trend line, back above the moving average, then then obviously you readjust, and maybe that call of it being the start of a bigger move lower would be wrong, but at least you can stick to a set of rules. And for the moment, these rules to me tell me we're heading lower. We should treat this as a downtrending situation in these other currencies, uptrend in the dollar. So all that being said, let's look over at gold. And gold now, as we speak, challenging its lowest levels since July. So again, sort of over 2-month lows here. It seems to me that we had that steep drop from above 2000, and then we've kind of consolidated, and various people, including me, I think at some point have drawn sort of triangle patterns here. And this to me looks like we're breaking down from that kind of tightening consolidation type triangle. And if we go on, this is the way I'm judging it. This was the first steep drop, and if we take it from these lows, roughly where you'd put a kind of triangle in place as well, that would take us down to 1700 pretty much. So that seems like a pretty neat target. If you're going to be a bit more conservative, you could target these peaks through here rather than the 1700 level. But to me it looks like we're headed for we've had the kind of the A, I mean this was like a B, and then we're heading for the C is starting right now. Again, with the idea that we've had some breaks of significant moving averages and trend lines. Looks like the trend is reversing. So then expecting lower prices is generally the way I'm playing this in gold. We haven't seen any decisive buying off this low, but keep in mind if we do get a close well back into the range, then okay, maybe we're just in range trading, and actually we could buy it at the bottom of the range with expectations it moves up towards the top of the range, even around 2000 again. But for the time being, it looks like we're breaking lower, and this is the way I'm projecting the pattern breakout. WTI crude, so really didn't do too much of anything last week. We banged into 41.50, pulled back to 40, and we've just been trundling along the 40 level. But we know from the previous price action that this is where the price tends to it tends to be a magnet for the price. And so to me, I'm looking at this and I don't really see which way the price is going to go, and I think that's why the price is just stuck in this mid-level. It's basic. If I get rid of these other trend lines to kind of make the situation just a little bit more clear, I think we really just are in a horizontal range along these lines, and we haven't moved out of the range yet. So we're right in the middle of the range at the moment, around 40. And so that tends to be one of the worst places to trade. You either want to be buying around the bottom of the range, so I had that level or this level as defining the bottom of the range. Looks like we've got this one defined. If we get another drop down to this low, we could just have a slightly expanded range. That would also be a potential place to buy. Or if we get a rally up again to the highs, that we may get a breakout higher afterwards, but for the time being it looks like we're in this horizontal range, so I'd be looking to buy and sell the top of the range until it breaks, rather than trying to make some kind of moves around the 40 level. Looks that to me is sort of low risk to reward opportunities while we're in the middle of the range. So moving over to Bitcoin. So actually, as we had suggested in last week's webinar, we pretty much got the bounce once and then twice off the 10k level. Again, this also looks a bit like it's just do you remember for the longest time we were consolidating under 10,000, we got a break above to 12,000, and now it just looks like we're consolidating between 10 and 12,000. So this level got taken out, retested, but we weren't able to make lower prices. To me, it suggests we're probably pushing up again, but yeah, I think I can see us pushing up to the top of the range, but again, we're stuck in the middle of the range. Not the most high probable, buying around 10k and then possibly selling around 12k seem like the better opportunities rather than trying to make some guess around 11 whether we move to 10 or 12 next. Bigger picture, we did get a sharp pullback from 12,000. Naturally, we're going to get some kind of optimistic buyers around the 10k level. That buying at the 10k level, as we've already basically had that opportunity. So I think probably if we get down to 10,000 again, it might precede the next drop. And part of why I draw this level through here is this was a kind of critical level that we fell through from after breaking below 12,000. So it could be that we're rolling over from here after that sharp drop, but I think we won't know whether that's the case until we get a move through 10,000, and then it's more a matter of jumping on board after that confirmation. But keep this in mind, potentially that's what's happening here, is that we topped out around that kind of key 12,000 level, sold off. 10k is just a short-term support before we drop lower again. And I've started on the weekly chart here on the S&P 500 because I think this probably does best describe what's going on. We reached that peak, we sold off, and we came back down to exactly where I'd suggested in last week's webinar, which was just this previous peak. We rallied off there pretty nicely. So the week finished, you maybe read it in the media that we closed down for 4 weeks in a row in the S&P, but you can see that we finished well off the lows. So actually potentially a fairly bullish signal from a weekly candlestick perspective here off the previously defined support. So we had, you can see better on the daily chart that we did rally those last 2 days of the week, looking higher today. And this is where we find ourselves on a 4-hour chart, is just retesting this little previous area of resistance here. Potentially, oops, hold on, MetaTrader connecting and reconnecting. Potentially get a bounce into this zone again, and so this potentially at this old high up to, I think this being a kind of emotional area on the chart, this could be a place where the market sells off again. If not, I think we probably rally up to these highs. But again, with the same idea, the currencies, if this sell-off is it's always slightly risky taking a bearish view on the stock market. Maybe this is just the dip that we needed, like on previous occasions, dip, keeps moving higher. Maybe this is just the dip we needed before setting off again. That's entirely possible, and clearly that's what people buying down here are thinking. But if that's not the case, either this zone or these previous highs here might be areas to look to position for another leg lower of this. Right, that's it. Thank you very much for watching. Quite an interesting period at the moment. We've had some sharp moves down for the most part, down in the FX pairs, down in gold, down in stocks. Opportunities to pick that dip if you think that the previous trends are continuing. If, like me, you think maybe there's a bit more further to go on the declines, then we're obviously just looking for a bit of a bounce to set us up with some decent levels on that front. Right, good luck trading for the following week, and make sure to subscribe to the channel so you don't miss these videos as soon as they're released.